Of course, the debate over financial regulation reform is underway on the Senate floor. Joining us now is Bob Pozen, Bloomberg contributor and chairman of MFS Investments. Last year, Bob outlined his prescription for reform in Too Big to Save, How to Fix the U.S. Financial System. And Bob, welcome to the show. You know, before we talk about the Dodd bill and what's going on the Senate floor here, we did hear Tim Geithner talking about the possible reform of Fannie and Freddie. This is something that a lot of people obviously talk about, but it's not in the Dodd bill, and it seems like much further away than the other financial reform that we're talking about here every day. It is more important, though, do you think?
Yeah, Fannie and Freddie are really hugely important. We're talking trillions and trillions of dollars. They were a financial disaster for the federal government, but more importantly and more fundamentally, they were a terribly inefficient way to help the housing market. So what we need to do, which is a big to-do, we need to subsidize whoever we want to subsidize low and moderate income housing directly through HUD or the federal government, and we need to leave those mortgages at $500,000, $700,000 to the private sector. There's no reason to have Fannie and Freddie involved. We already have pretty liquid markets. The Fed has supported the liquidity. It may have to support it more, but we can't have these behemoths with trillions of dollars of debt and very little accountability.
If we get rid of Fannie and Freddie, though, Bob, do you see the entire structure of the U.S. housing market changing substantially? I mean, would we see, for example, home ownership as a percentage go down in this country?
I really don't think so. You know, in Canada, they have no tax deduction for mortgage interest. They have 20% down payments, and they have roughly the same ownership that we have here. So I think that's a bit of a myth. I think we may, as I said, we're going to need subsidies for low and moderate income housing. It's much more efficient to give them directly to the homeowners. And we will have, and we already have, a good private market for mortgages. And as soon as we reform the securitization process, we'll have a good liquidity in that market. And that's something that's in the Dodd bill, a start toward reforming securitization.
What do you think about the possibility of reforming Fannie and Freddie in our lifetimes here, Bob? I mean, let's talk about actually in the next 12 months. I mean, do we see something coming to the floor in the next year?
No, we don't. But we have to develop a real consensus about how to do this, and that's probably going to take 2 years or so. And we have this overhang of $5 trillion of mortgages. So if I had to give it a time frame, I'd say something like 2013, 2014.
Let me ask you about financial regulatory reform, the Dodd bill that we see here. I mean, do you see that passing without substantial changes anytime soon?
No, I see that passing by Labor Day. It's definitely going to pass, in my view. We've taken out one of the big stumbling blocks, which is the pre-funding of that $50 billion resolution trust. It really should be called the dissolution trust, not a resolution trust, because when systemically risky institutions get into that, they're going to be slowly wound down, hopefully in a way that's less a problem for the system.
All right. Hey, Bob, thanks so much. Bob Pozen there.